We are off to the races. We see the markets opening lower today. Trade back in focus, trade flare, if you will, between the U.S. and Europe as the World Economic Forum is underway in Davos, Switzerland. Joining me now with more on these markets is Walker Williams, Chief Market Strategist at Lido Advisors. Walker, it's great to have you on the show this morning. Joining us from Vail, Colorado. What do our viewers need to know as stock markets get open for trade today?
Good morning, Kristen. There's a lot to digest over the weekend, right? We had sort of the flare up with the Greenland conversations, additional tariffs, which the markets are digesting, but there is sort of a belief that cooler heads will prevail in that, but volatility is here to stay. And then another unique development over in Japan over the weekend. Obviously, their bond market has come under pressure with bad fiscal results, causing yields to spike in their long-dated bonds, and we're seeing a sell-off in the bond market as well. In general, we do think this is the type of things that should be expected with what's going on geopolitically and with valuations where they are. Volatility, we think, is something investors should get used to.
Interesting. So that was going to be my next question, Walker, which is this temporary, or does the recent action, the rhetoric, of course, that we've seen on trade and the ensuing action in the equity markets indicate something more sticky that we could be seeing taking shape?
That's a great perspective. We've seen this trade rhetoric go on for about a year plus. The real determining factor is, does it actually stick or not? The market rushes to price things in. And always, when the EU is having emergency meetings about reciprocal tariffs, things like that, it causes unease. I think everyone would agree tariffs are bad for economic activity and global trade. Obviously, in Davos, they will be discussing that this week. The other compounding factor to all this is valuations. Valuations are high. Obviously, there's concentration in AI stocks. There's sort of this general unease that we're seeing in the market, and, volatility can spike. The VIX is up today, things of that nature caused by other events.
It is interesting. We are going to hear from President Donald Trump at the World Economic Forum in Davos early tomorrow morning, 8:30 a.m. Eastern, an hour before the equity markets open here in New York. What should investors be listening to when the president speaks there?
I think it's the combination of what the president says, how he frames it, and what is, practical or not. The other thing that investors should really be paying attention to this week is more of the data coming from the Fed with inflation and how that is trending. So, obviously the president is going to talk about his agenda, what is going on. It's tough to forecast how he's going to couch that. But I think any sort of reach for stability, reach for agreement would be positively viewed in our opinion. But the other thing that's going on this week is what the Fed does, what the inflationary prints are, which would be more telling for different aspects of economic and market involvement.
Mm-hmm. I do want to get your take, Walker, on some of the themes. We're speaking early in 2026. It's still the month of January, so we've seen investors build some of their positions, respond, obviously, amid the recent volatility. But trades and trends that we saw in 2025, like the dominance of AI names, precious metals performing well in 2025, what worked in 2025, do you anticipate that to continue here into 2026?
I think there's longer dated trends that are definitely interesting. AI, it is real. It is a thing. I think the questions with AI have turned more into what that really means for earnings and less sensationalism. Can these companies grow their earnings? Now, there is the other side of that coin, and we have seen some what I call circular financing deals with data centers and contracts. That is something to watch. The other risk is concentration. If you look at the large indices, those names make up a disproportionate amount of the index. Obviously commodities and metals is tied to production and inflation. There is definitely could be a tailwind there from that standpoint. And another trend that we're watching is dollar depreciation. Obviously, what's going on in the JGB market, it could be a real time to look offshore again at those companies. Obviously, in Europe and other parts of the world, you have nations coming off basically a stagnant growth number into something positive. Those are really the trends we are watching, to say the least.
All right, Walker Williams, Chief Market Strategist at Lido Advisors, joining us this morning from Colorado. Walker, thanks again.
Have a great day.